Happy Saturday, everybody. Guys, April data is in, and you're going to get it here first. We're going to look at what the Greater Nashville Realtors has, what I'm predicting that they'll post on Monday, and what it means. Because I got to tell you guys, the price number is very boring, but what's happening under the surface is absolutely mind-boggling. So we're going to look at a couple data points. We're not just going to look at price, but we're going to look at transaction volume. And then we're also going to spend some time looking at price bands on contract volume and active listings to show you some crazy things. Now, you'll remember I predicted a listing explosion in April, and depending on where you're sitting, you may have seen it or you may not have. So stay tuned and we'll get into the data. So without further ado, let's get into the data. We ended the month, prices at 465, 6,000 in inventory, closings 2392. So where are we at on price? Well, I refreshed it yesterday and I got 465. And that is when they do the snapshot. This morning is at 468. So probably somewhere between 465 and 468, basically flat month over month. Now, why is that important? Well, there's going to be a big headline that they're probably going to avoid, which is minus 3% year over year. And let's be honest, that's not news. If you've been watching this channel for a while, you know I've been talking about April being minus 3% year over year. It doesn't matter, guys, because the most important thing is what's happening month over month. And month over month, it was flat. And that even really doesn't tell you what's going on in the housing market, because there's some underlying issues, depending on where you're sitting, that matter way more than this median price. And let me give you an example here. We go back here, look at this. Only 2,215 closings. I mean, what in the world? 2,200 closings. Okay, it's down from March. And when we look at closed volume, it's like 30% down from last year. We were at 3,100 last year. Where's my April? 3,095 last year. We're at 2,250. That's like a 30%, 25, 30% down from last year. Now, what makes this even stranger is when you look at contract volume. Okay, contract volume was forecasting somewhere around 2,600. I mean, I use contract volume. I track it every day on my website, and you can see we started the month 2,600. So I predicted 2,600. It's not materializing. Now, contract volume is going up. So I do expect May to have higher close volume than 2,200. But my goodness, why is this not translating? Well, let's take a look at the price bands. I'm going to start with active listing here, but then I'm going to talk about contract and closed volume and what we're seeing, because it's actually really fascinating. So here we're looking at active listings, and active listings specifically in Davidson and Williamson County, because that's where I have a full year of data. And when I said there was going to be a listing explosion, what I thought would happen, look at this blue line. That's what I thought would happen in every price band. But guess what, guys? It's not happening in every price band. It's only happening in the million plus prices. So active listings, 1 million plus, $1 million or higher are skyrocketing right now. Active listings under 700,000 are basically flat. Now, guys, look, I'm telling you, this is the biggest story that nobody's talking about. This is a huge story. And so one of the conclusions I thought was maybe people can't buy $1 million house. After all, you know, we're getting squeezed. Maybe they're all moving down into that lower price tier. And maybe that's happening some, but let's take a look at contract to closed volume. When we look, let's start with the $1 million listings. Okay. When we look, first of all, you can see this red dotted line is contract volume pushed out 30 days. This is a great predictor of how much the closed volume will be. And you can see it's a high correlation here. So we can see we're headed towards 300 closed volume for $1 million listings. Well, you can see last year we were around 300. So we've been a little bit lower than last year, but not a ton. We were around 250 in April and May, and here we're around 240, 250. We have these drops, but that's pretty standard. I mean, you can see we're about the same as we were last year, maybe a little bit lower, but we are going right back up over 300. That's the forecast, okay? Interesting, because I would have thought that the active listings accumulating is because buyers can't buy. That's not what's happening. There are more people listing. The new listings are $1 million houses. People are cashing out, I think, because they know that there's going to be price pressure on these higher price bands. That's just speculation. I don't know. Look at the 700 and below. Okay, remember, this is just Davidson, Williamson County, but some interesting things here. You can see that contract volume very accurately predicted closed volume all the way up until February. Excuse me, that's January, actually. January because I pushed this contract volume, I pushed out 30 days. So it's showing up in February. But in January, we saw contract volume skyrocket and close volume still hasn't caught up to it. There's been this gap, and I thought there was something wrong with my forecasting, but the truth is that contract volumes are not materializing into closed volume. There could be a few reasons for this. One is that it's just taking longer to close and it's dropping out of the closed volume window that I have. I think if that was the reason, it would eventually catch up, and we're starting to see it catch up. But really, I think one of the reasons, and the most likely reason, is that people going under contract, especially with the volatility in interest rates, are miscalculating what they can afford, and those contracts just go back on the market and they never actually materialize into closed volume. I think that's happening a lot more in the lower price bands. Now, that's a hypothesis based on just the fact that the $1 million, very predictable. The under 700, much less predictable. So even the 773, our closed volume going to be there? I think it's more likely that it will be, just because the volatility in interest rates has kind of calmed down a little bit and it's kind of weighted to the downside, which means even if it has been volatile, it's been volatile towards the downside. So I generally think that we will be closer to the 700, just like we're closing the gap here, than we were before. But nonetheless, that's pretty wild that it's like that. That's pretty wild. The volume that we're seeing here is much lower than last year. By May, we were well into the 800s to 900 on closed volume in Davidson and Williamson. Here, we're maybe going to be into 700s by June. So you can see that the closed volume is very subdued in the under 700s, even as that continues to be the tightest price band. There's not much inventory out there. The last thing I'll say about this is this skyrocketing $1 million listings, it is overtaking the under 700. So we are about to see more active listings in Davidson and Williamson over $1 million than all of the listings combined under 700,000. That is just wild. And that makes me think, is this really realistic? Are these $1 million listings, are they going to hold their pricing, or are they going to start really pressuring some of these $1 million neighborhoods? Starting in June of last year, we saw a lot of these $1 million neighborhoods start softening. It kind of held its own for the past 4 months. Now, in the back half of the year, if this continues, it's hard not to imagine a scenario where prices don't take another leg down in these neighborhoods. So, yet to be seen. Obviously, my forecasting is average at this point, maybe a little bit above average. I mean, I predicted a listing explosion. We definitely got one in the million price range. I thought it would happen everywhere. It clearly didn't. It did not happen in the 700 and under. And it pains me to say that, because guys, the quality of listings of these 1,000 are also going down. You get 1,000 listings that you can choose from. You're always going to pick the best value in those price bands. And as you sit in the same amount of inventory and people pick off the best value, whatever's less gets lower and lower quality in that price band. So if you're at 1,000 8 weeks ago and you're still at 1,000, it's going to be lower quality. That's just my opinion. Anecdotally, I think that's what's happening. But you guys tell me in the comments what you think. Interpret this chart for me, because I'm just looking at it and I'm thinking, man, that just doesn't look good. So with that being said, okay, last thing I want to show you is this chart right here. So I had if y'all don't know, I use Python a lot for my data analysis, and I had a buyer reach out to me and say, hey, how come this house in Berry Farms hasn't sold? Because it's been on the market for a very long time. And so I went back and pulled and plotted it against all other active listings. In other words, if you were in a Saturday in August and you flipped open and searched Berry Farms, you would have gotten several listings, and this one would have been in the middle of the pack. Okay. Now, Berry Farms has had low close volume. It's had price pressure. And you can see it by this chart that active listings in that neighborhood have been pushing down, and they're now well below 400 per square foot. Interestingly enough, though, you can see this house was always in the middle of the pack. And in a neighborhood that was struggling with closed volume, it being in the middle of the pack wasn't exactly getting it to move. Well, guess what, guys? That house now is leading in price. It's now the lowest price by price per square foot. And on top of that, because it's been on the market for so long, it's a lot more negotiable. Because I've snapshot this data, because we are focused on the data and being strategic, these are the kind of analyses we do to understand what we can do with a property and whether or not, and really hypothesize what the opportunities are with a property, being strategic in how to approach a purchase of a property. So I was kind of really proud of this chart, so I wanted to show it to you guys. But nonetheless, we have the data to be extraordinarily strategic in a very uncertain time to find the best value in a very data centric way. So if you do have questions or you do want to see more analyses like that, reach out to me. Let's talk. Let's see if we can do something together. If you're a buyer and you're wanting to look at a specific property, feel free to reach out. Let's talk. So that being said, I hope you guys have a great weekend. Thanks for watching. And if you do want to connect, I pinned in the comments a Calendly link where you can book time. We can schedule a Zoom and talk through any questions you have about real estate. Hope you guys have a good weekend. Thanks again.